Okay, let's get right into it. For any trader, the real dream is finding that next huge stock before it pops. That's the whole game, right? It's the difference between chasing a train that's already left the station and being right there on the platform when it takes off. But how do you actually find those launch pads systematically? Well, that's exactly what we're going to break down today.
The whole idea behind this is actually really simple but incredibly powerful. And this visual, it just nails it. Think of a stock's price kind of like a coiled spring. When it's trading in a super tight, compressed range, it is just building up a ton of potential energy. The more that spring gets squeezed, the more explosive the release is going to be when it finally lets go.
And yeah, that's the multi-million-dollar question, isn't it? It's one thing to look at a chart after the fact and say, wow, what a breakout. It's a completely different challenge to scan through thousands of stocks and find those coiled springs while they're still coiling so that you can be ready for the move. So here's our game plan. We're going to start with the why. What's really happening behind these big moves? Then we'll decode the specific pattern that signals them. After that, we'll get into the blueprint for a scanner to automate the whole hunt, compare this pattern to another famous setup, and finally wrap it all up into a clear, actionable workflow. So let's start at the beginning with the market psychology. What's actually going on under the surface of the chart to create this coiled spring effect in the first place?
It all boils down to this one concept: supply absorption. Picture this. Huge institutions, the smart money, they want to buy a massive position in a stock. They can't just hit buy all at once, because that would send the price to the moon. So instead, they do it quietly, over weeks, sometimes months. They just sit there and buy up all the shares from sellers who are getting bored or impatient. They are literally taking supply off the market.
Okay, so if this quiet accumulation is happening behind the scenes, how can we actually see it on a chart? Is there some kind of fingerprint or a signature it leaves behind? Well, it turns out there is. There's a very specific pattern that acts like a dead giveaway. And this brings us to Mark Minervini, an absolute legend in the trading world. This guy won the US Investing Championship with a staggering 155% return. He's the one who really codified this pattern, and his quote just sums it all up perfectly. The pattern is basically proof that the battle is over. The big buyers have won, and the sellers have given up. He named it the Volatility Contraction Pattern, or VCP for short. And it's not just one quiet period. It's a series of pullbacks, or contractions. But here's the magic. Each pullback is shallower than the last one. So maybe you see a 25% drop, then it's followed by a 15% drop, and then maybe just a tiny 8% drop. That's the market screaming at you that the sellers are running out of steam. Now, this is where the whole idea just clicks for a lot of people. Think of it like dropping a basketball. The first bounce is super high and energetic. The next one is a little lower. The one after that is even smaller, right? Until it just kind of settles. That is exactly what a VCP looks like on a price chart. The wildness, the volatility is literally being squeezed right out of the stock. So a real classic VCP has three things you can actually see and measure. First, you need multiple pullbacks, at least 2 or 3 of these little consolidations. Second, you have to be able to see that the price range is getting smaller each time. And third, and this one is absolutely crucial, the trading volume should just completely die off during that final, tightest little squeeze. It's the silence right before the storm, confirming that the sellers are all gone. Now, you can probably imagine trying to find these 3 elements manually across thousands of stocks. Yeah, good luck with that. It's basically impossible. So how do we automate the search and build ourselves a high-quality watch list? We use a scanner which really acts like a funnel of precision, and this visual shows the process perfectly. We start with the entire universe of stocks, over 2,000 of them. Then the scanner applies a series of strict mathematical filters to just pour that universe through the funnel, leaving us with a small, manageable handful of the best potential candidates to look at more closely. And this isn't some kind of mysterious black box. The scanner is really just a set of very clear, logical rules. As you can see here, each line of code is basically a kill switch. If a stock fails even one of these conditions, boom, it's out. It's instantly filtered out. This makes sure that only the truly high-quality setups ever make it to your screen. Okay, so let's translate that code into plain English. What is the scanner actually looking for? Well, a few key things. First, is the stock already showing strength, trading near its 52-week high? We don't want weak stocks. Is it a smaller mid-cap where moves can be way more explosive? And most importantly, is it in a healthy, confirmed uptrend with the price above all its key moving averages? See, each rule just adds another layer of proof that we're looking at a strong, healthy candidate.
Now, the VCP isn't the only game in town when it comes to breakout patterns. To really get it, it helps to compare it to another super well-known pattern, the Darvas Box. This will really add some important clarity.
This slide just lays out the core differences beautifully. See, with the VCP, its whole game is about location and logic. It absolutely has to form right below a major area of resistance, and its whole story is about supply being soaked up. The Darvas Box, on the other hand, is way more flexible. It can show up anywhere, and it's really more of a general momentum indicator. You could trade up or down.
Let's make this real with some actual charts. On the left, there's your classic VCP. See how the price is getting tighter and tighter right up against that yellow supply area? It's a very specific strategic setup. Now, on the right, that's a Darvas Box. It's just a pause in the middle of a strong trend. Both can be useful, for sure, but they're telling you very different stories about what the market is doing.
So, we've covered the theory, we've decoded the pattern, and we've built the scanner. But this brings us to the most important part of all. How do you actually go from a list of stocks on a screen to placing a trade? This is where the human element, your brain, comes in. Okay, I gotta be super clear about this because it's the most important takeaway. The scanner is an unbelievably powerful filter. It's amazing, but it is not a buy this now button. It gives you a highly curated watch list of stocks that look great on paper. Your job is to then do the final qualitative check, the visual analysis. So the workflow is really simple and systematic. Step 1, you sort the list from the scanner to see which ones are the strongest of the strong. Step 2, you pull up the chart and you use your eyes. Do you actually see that contracting pattern? Is the volume drying up? Step 3, you identify your pivot point, the high of that last tight area. That's your trigger. And finally, step 4, you define your entire trade, entry, stop, and target, before you ever even think about hitting the buy button. This slide really pulls it all together into what you can think of as a final flight check. You've got the system, the criteria from the scanner. You've got the visual audit that you perform with your own eyes, and you have the specific trigger for execution. It's a complete protocol designed to weed out any mediocre setups and make sure you're only focusing on the absolute A-plus opportunities. So we've built the entire funnel, right? We've gone from over 2,000 stocks all the way down to a single execution trigger. The scanner finds the coiled spring, and your visual check confirms its tension. So the final question really is for you. Once you pull that trigger, how are you going to manage the powerful, explosive energy that gets released? Because that is the true art of trading.